The Indian stock market on April 7, 2025, experienced one of its most significant crashes in recent history. The Sensex plummeted nearly 4,000 points, while the Nifty 50 slipped below 21,750, wiping out billions in investor wealth. This devastating crash was not an isolated event, but part of a broader global market downturn. Let's explore the 5 key factors that led to this financial upheaval. The primary trigger for the crash was US President Donald Trump's announcement of sweeping tariffs on all countries. This move sparked fears of a global trade war, with several nations, including China, planning retaliatory measures. The tariffs not only heightened tensions, but also raised concerns about the impact on global trade and economic growth. Following Trump's tariff announcement, fears of a US recession intensified. Analysts pointed to rising inflation and falling growth as indicators of a potential economic downturn. Goldman Sachs increased the probability of a US recession to 45%, further exacerbating market anxiety. The global market was already on edge due to a sharp decline on Wall Street earlier in the week. The Dow Jones had fallen significantly, and this trend continued into Asian markets, with Japan's Nikkei and China's Hang Seng experiencing substantial drops. This global sell-off created a ripple effect that hit Indian markets hard. Caution prevails in the markets as investors anticipate the Reserve Bank of India's (RBI) monetary policy decisions scheduled for April 9, 2025. In light of the evolving economic landscape, expectations are growing that the central bank may reduce interest rates and implement additional measures to bolster economic growth. Foreign portfolio investors have resumed their selling streak in Indian equities this April, following a brief period of buying activity in March. This renewed selling pressure comes amid growing apprehension over the potential repercussions of Trump's sweeping tariffs on the global economy.